All right. Welcome to Chart
Hi
Talk.
everyone. Yeah, our first episode here. We're gonna start doing some series of the chart talk. Every Wednesday, we'll go live at 12 p.m. Eastern time. We will record it, and you can see the recordings after if you missed the live. The goal is to go over some charts, some important charts for the market, where we think the market is moving, where we think some individual tickers will perform in the near future, and the overall market as well. We'll talk a little bit about that, all the tension that we have with Iran and all what's happening with Japan. No one is really talking too much of what's happening with the yen and with Japan, but that is a huge problem for the United States and for the dollar, and most likely for our inflation and interest rates. There's a reason why we try to help Japan. It's not like because we like them, it's because we panicked, right? Because when Japan starts saying we're going to start selling our treasury bonds and selling your debt, that's a massive no no for us because that will devalue the price of the bond and it will increase interest rate. And our debt is so high that we cannot afford to have higher interest rates on our debt. The same is happening with Japanese. If you don't know, you can get a loan in Japan for 1%. Okay, that's what they do. Loans at 1%. And what's happening in the world is the majority of financial institutions have office in Japan, get a loan in yens, and then convert them into dollars, which devalues the yen dramatically because now you're selling yen, so it's supply demand, and with that, by losing purchase power with the yen, it really affects their economy. But they are against the wall; they cannot raise interest rates because of their debt as well. And they need money because Japan is a bunch of islands. They don't produce anything. They buy everything. And when the yen is weak, that means that it's going to be a lot more expensive for them to buy stuff. So they wanted to sell the US Treasury bonds to have money to buy oil and other stuff like that. And Bassett said, no, wait a second here. Okay, we'll give you guys a loan. We have some euros here that we'll sell and we'll lend to you guys some money so you don't touch our treasury bonds. Okay, so that is a big thing there in Japan and us. I think it's going to affect the markets in the future um, and the charts. I just want to get that out of the way. That's what I think that in the after mid elections we might need to deal with that. I think right now it's contained. Um, So let's see. I think if the majority of the people, especially it's all over social media, we all know that during in a mid-election year, before before the elections, the market likes to pull back, right? Because the market hates uncertainty, and that's where you get an election uncertainty. You don't know what's going to happen. And usually after the election, the market likes to make a run because then you know what's going to happen.
Yeah, plus it's already
So
been suppressed from that period of time, too.
correct. So this is what we're looking at. I'm gonna pick Spy. Okay, I love Spy. I trade Spy every day. It's really the ticker that I'm familiar with it. I'm familiar very much with Qs as well another, but this is where I trade on a daily basis. I also like um the dollar to compare us with this. But let's go here. So we're definitely right. We're in a bull run. There's no question about it. There, look at this. We are going up, and I think we're getting to that level that we need to retrace a bit here. Okay, and after August, September, we all know it's the usually the red month of the year, September. Um, and with the midterm elections, there's a high probability that we're gonna pull back here a bit. Okay, so we gotta see the levels that this will be a healthy pullback, and the levels that will start be concerning for the market, because the market moves in waves, and this wave is being just slightly pullbacks, right? Just keep going up. Going to the recent history, we just did all-time highs. I'm gonna go here to a smaller time frame. Okay, this is the weekly, everyone. So all-time here in the beginning of August. Then again in the second week of August, we go and we make another all-time high. I don't think we're gonna go there again. Okay, I don't think we go there again until we're all done with September, October, and November. I think this was the high for now, unless we have a massive catalyst in the market that we're not expecting, like for example, lower interest rate, like that. I don't think we're going to get to that
What do you think
779.
about
I think the
like a war ending call? We've had so many false alarms with all of that. How do you think that might affect potentially pushing up to those levels in like some sort of euphoric run?
we might get. I think we might get close to it, to that
Hmm.
780,
But reject
but not
before.
break it. Yeah.
Hmm.
Yeah. And if we get above, it will be a wick, and then we'll retrace. That's what I think. Um, I think institutions are already. We need to understand how the market works. Okay, big institutions have millions of stocks. Okay, they need to sell it to someone. Who's that someone? Real retail, right? So you cannot just dump everything, because the market will come down immediately and they're losing value on their contracts, on their stocks. So I think this last one here was to try to grab what they could, dumping, okay? Because they need to take profits. They need to take. You hold a stock, yeah, that's all nice, but then if you don't sell, if you're not cashing, so they need to start cashing, and I think this is the time right now. Uh, this was the last acceleration candle for the trap, and I think we're gonna come down. This will be the key level. Okay, that's 760. Once we pull back to 760, I want to see how the market reacts here. At that time, the 90 EMA will be there with time, so I want to see how the market reacts there, how the bounce is. We will bounce, but then I want to see how strong the bounce is there. Uh,
How how long do you think this process lasts? Because it's an interesting scenario. I mean, you can clearly see a head and shoulders forming here, and you can clearly see, on the weekly time frame, and you can
mm,
clearly see, this run up is pretty steep, and most of those, retracements levels are in place. So that all makes sense. The part that I struggle with a little bit is getting the time frame in here for it to go, because nothing better than finding the top of the market like here and shorting the market while we live through the bounce. So my concern is we get a pullback here. Maybe we get to the level you're talking about, and then we bounce again, and we get close up there. And then we got to figure out whether or not that collapse is going to come and give us kind of that 2 to 5% correction that it looks like it's warranted.
I agree with you 100%. And if you day trade on a regular basis, we know that usually the first move is not the one that you're going to make the most money off of it. So what I'm expecting is we have the first move, we come down, we bounce, and then if we fail to make a high here, then is when you're going to go.
Hmm.
Right? Then is when you're going to have the chance of really making good money on your short. So what I'm looking here is the market. This is what we call accumulation, right? So it's big money, what we call chop too, right? The chop is nothing more than big money institutions buying or selling. You don't really know.
Or
They're
both.
accumulating here, or both, exactly. And then what usually happens in the market is we accumulate, we manipulate, and then we distribute. Okay. will go down. Uh, so the key level here, if this is accumulation and this is the manipulation, you're gonna know if it's real manipulation when you come here again to that accumulation, to this channel that we had here for months here since pretty much May to August. If he comes here and retests and he bounces, if he doesn't bounce and we go here, this was the manipulation candle. Okay, to get the last of the bulls and trap them. So that's what I'm going to look until we have a little 11, 12 days to the end of the month. Usually August is not known also to be a very strong month because it's a vacation. Pretty much all around the world, people take August as their vacation month. Um, so this was probably very easy to manipulate in the first 2 weeks because there was not too much volume into it.
Right.
And I want to see when we come back in September what's going to happen. And usually September it is the worst month of the markets exactly because of this. August low volume, manipulate, they came back. Oh, let's take profits, and then you start. It's like a snowball effect. Take profits, stop loss start trading, and you start coming down, and then you get to a support area. The ones that trade with us on a daily basis, they know how I love the gap between the EMAs, and this is what I'm seeing at SPY right now. Right, look, we are very far away on the weekly from the 90 EMA, and once we come here and test this, we're gonna have probably a bounce, and this is gonna coincide right away there with 760. Um, we were absolutely right in this levels when we were chopping. We said so many times 730 is a level. We said 712, 715 is another level. Um, 728, we said it was another level. Here, the 748 was another level. So all this played very well. And when we clear them, we had the move. So it's always by steps. The market loves to go up or down by steps. But that's what I'm seeing right now. There's a lot of look. The market follows the bond market. The bonds are 5 and something percent, right? And man, that's free money. If you
Yeah.
have a lot of money, if you have $2 or $3 million, you buy bonds and you know that you're going to have 5% return with no risk. And that's what's going to take cash liquidity out of the market and put it on the bond market. So I think it's the highest that we have in the past 19 years,
Yeah.
something like that. So we need to analyze what's happening around us in the economy. Uh, and it's just the bond market. We're having an issue with labor. We're having an issue with inflation, purchase power. Not to talk about the overall debt. It is astonishing. Our credit card debt right now and mortgage debt. Um, there are thousands and thousands of houses around the country that are delayed in more than 3 months, 6 months in mortgage payments. The problem is the house market is so overvalued right now that the banks are not even taking the house out of the people because if they go try to sell at an auction, the investors are not buying because they know it's too high right now. It is a massive risk. So they're taking this houses, some of them to auction, and they don't sell. So they're like, whatever, stay there, pay whatever you can, and I'm not going to pull the trigger yet. But it's going to be a point they're going to pull the trigger, and it's going to be nasty, the house market. Um, it needs to reset right now. When you have for you to buy a house right now, you need the income of the both bread makers at home. Not only one income is not enough. It's a problem. You're getting into financial debt right away when you use both of your incomes because then you don't have money left for the rest of your everyday basis like utility, food, clothing, and all that. And our credit card debt is at the highest that it's been. I think it's 2 trillion something dollars right now, if I'm not wrong. It's astonishing.
Pretty crazy.
It's so bad. I saw an article the other day. American Express. It doesn't even matter if you have 20 years with American Express or not. They are starting to reduce your credit limit before you
Really?
can do. Yes. So that is a massive red flag. A lot of people on social media start complaining about it. Came out. I'm going to use American Express ever. So that is something that need to be pay really attention to it. And then JP Morgan the other day came and talked about the food issue, the distribution. That is not good to Bank of America a couple of months ago said be careful with your long-term stock. And then you have the guru that I think he misread the market. People like to talk about him, but I think he exited the market a year too early. Warren Buffett is sitting in the most amount of cash that he has ever been
Mm-hmm.
in his life as a trader.
Better
So
to be
that
early
tells you a
than late.
lot. Correct, because you never know
That's
when
right.
it's gonna go. Yeah, you never know. Let's we I think everyone that understands economy, understands how the market works, we shouldn't be here. Okay. What is driving this is the madness of AI and the chip.
Yeah.
This is this is what's driving. And the supply and demand is what keeping this and Nvidia's earnings and all that. As soon as Nvidia as and we're about on the 26th, Nvidia's earnings. As soon as we have some earnings that are not exactly what the investors are expecting on Nvidia, be careful. So because Nvidia is not doing, look, we can't go to Nvidia here. This looks messy. I apologize for that. All these lines were before we did the stock split. Those lines I kept them on purpose. So we went to 1,200 and something. We are at the same level right now. But if you look at Nvidia, look, we are in this $20 range for the past 4 or 5 months, right?
Mm-hmm.
It's not really doing anything. We're going sideways. And this is the big catalyst for everything, for all the chip sector. This is the the
Market
mother.
leader. Yep.
Yeah, exactly. So not doing anything, pretty much. If you look back, yes, look at this. This is here we're making money. Now we're just stagnant, waiting and to see what's happening. So, with that being said, regarding Nvidia and the AI bubble, until we start, until we hear there's supply issues, that there's more demand than we have than supply, I think we are okay. But I would highly recommend if you are NVIDIA, if you made this run, start edging, meaning protect your capital with some long-term puts, or start taking profits here because this can get ugly. And if it gets ugly, it will be really fast.
Mm-hmm.
Um, the downside will be really fast because everyone will start panicking. Okay? When you see stuff like this, that as we are now, okay, things don't go up forever. We're in a bull run. A typical bull run lasts 4 years. And if you look here, I would say that this bull run, so flat, flat, and Nvidia. Okay, let's say we start around here. Okay, so 2026. So it's 3 years. We started in 2023. 3 years. We might have until the end of this year, and then um, we might just start coming down. Okay.
Unless we correct going into the end of this year, and we look at and then we build after that. I mean, we could have a major correction here.
Yeah, you took away the words out of my mouth. I was gonna pull spy
I
to say
reached right in
exactly
there.
that. Yeah. So if the pullback before
Mm-hmm.
mid-election is really strong and you come down here, then yeah, you can never run
What's the
again.
bottom of that line? I can't read it because I'm old.
Yeah. Yeah. Well, let's say it's 6:30. It's 6:29 on
Six
SPY.
629 SPY. So
Yeah, yeah.
629 SPY, which is 140 points from here. That type of correction is the kind of world shock financial type correction.
I'll tell you right now how much it is from where we are right now. If we go down there, uh, we'll be looking at a 18% correction
Yeah, yeah,
right there. Okay.
yeah.
We're not going to go there right away. Look, 700 is going
No,
to be the
yeah,
and we can tell here, right? There's the support there. What is that? 697. Okay, 697, 700 around here. That is your big. If you look the higher time frames, the higher time frames show you where the support is, right? Wick right here. Okay, this is a support level. There it is, 697. Okay, this is another one that we went to touch and we bounce. Okay, open close wick. Okay, this area here very important too. This 618 area, I mean 718 area, 720 area. Okay, very important to hold, and that's exactly what we have on the monthly. That's where the R9 EMAs is holding. But if we start coming down, this is going to come a little bit lower. So that those two wicks there are key. Okay, but to go there, you just got to go over candles. Okay. So this was a support here. Okay. And we are above it. So once we start coming down, you just got to follow the monthly wicks and see if we bounce there. There's your 760 that I've been talking about. It's the wick of that candle. And there's a level right there. Okay. We lose that. We come down here to 756. Okay. Losing that. There's the open and there's the wick on the month. I have a couple of lines there, but you can tell here, okay? So this will be your next support area to bounce. Let's say 755, 756. If you lose that, then you're going to come to the bottom of this candle here, your 750. Massive level. 750 is a big level. It's a mental level as well, and it's a level that we were there for a long time. So those are the levels that we can see the market trying to retrace to and see how it bounces from there. Okay. Um, yeah, the first one is 760. I think it's just a matter of time for us to get to 760. If we go here on the smaller time frames, this is I love to see this, right? Because on the 4 hour, and I said yesterday, look, we're gonna fill the gaps to the downside and touch the MA. What look at this. Okay. And we're trying to hold here. We did this trade yesterday beautifully to that level when we were there. And now we're having a hard time breaking the EMA to the upside. And this is what's going to tell us of the next move. If this daily candle or this 4 hour candle closes above that EMA, and this is the daily gap that we had on Monday, if we reclaim the gap, we'll continue to the upside. And then we'll see if the market makes a higher high that I don't think it will. Even if we go up, I think we're going to make a lower high and then come down. But if we don't even claim this, if we don't close above that, we're just going to make a lower low. Okay. And this lower low is going to retest here 766.70. If we lose this, look at that. It's going to be a fast acceleration to the 760.50 because there's no support there. There's really nothing. Okay. There's nothing here. So this is a great trade once we lose this. So that those are the levels that I'm looking for. Um, I don't think uh, unless, like I said, unless Nvidia kills it next week on the earnings and we pop to go there.
Well, think
Okay.
about that for a second. If Nvidia does kill it with earnings, and they get, let's say they get, they blow it all the doors, they do 200% on earnings, their forward guidance can't be any better than it's been. They've already extrapolated out every penny from the foreseeable market existence in order to maintain this growth rate. And if they claim it's higher, it has to be BS because there's nobody else to buy it. So when forward guidance can't predict the run to continue, then where we start to stall out. Now, granted, what I'm saying here might be a little short-sighted for this particular quarter, but we're getting closer to that point. So it's not too much of an exaggeration in terms of what could potentially happen here with Nvidia. And the reason that I bring it up right now is because they're financing everybody now. So they're financing people to buy the chipsets because they can't get the buyers in a natural progression of growth to afford them, for smaller companies. So think about how that could actually impact the results. They can't win on whatever they say at earnings potentially.
Yeah. Well, Jensen is a very smart man, very
Yes,
intelligent.
yes, he
Let
is.
me rephrase that. And what NVIDIA has been doing to keep up the growth is he started investing in all the companies in the AI sector. And he's taking advantage that these companies are going up. So they're making money on their own portfolio and investment. And that has been helping them tremendously on their earnings side as well, not just selling the product, but they're almost like an investment company right now. They invested heavily in everything. They invested, I don't know how many billions on SpaceX, for example, and they are invested in all this stuff that we know. I think they're invested in MU and other stuff. So think about once the market on the chips start going down and that portfolio that they have also
Yeah,
starts
it's
declining, it's going
exponential.
to be correct. Okay. And that's what people need to be aware of because then it's not just a product. It's now if you don't sell, if you, we need to see how they do that. But if they sell, they know it's going to be a catalyst also for the market to come down aggressively. Because today we all have information about who buys, who sells, and all that. Once it starts coming out that Nvidia is pulling the plug and pulling all the money out of these companies that invested, everyone is going to take the money as well and panic. Um, what I think is in a 3 to 6 month is a rotation of capital to other industries like finance, like health, some of the retail, and this is what this big hedge funds. This is what they do. They start rotating money when they see it's getting to be risky, right?
Hmm.
But the thing is, we've been saying that we are up there for the past year and a half.
Yeah.
Um, and I'm one of those. I really thought at 700 we were going to add a correction.
Yep.
I thought 2026 would be a year of a correction, and it's not. You just make all time highs after all time highs, because we're getting AI pushing, 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 and the way the stock market has been structured is these chip companies have a lot of influence on on the market. If you look at the rest of the SP 500, these companies are not doing that great, but you have 4 or 5 companies that are moving everything. If you look at SPY on a daily basis, it pretty much kind of moves with Nvidia.
Yep.
It used to be Apple. It used to be how Apple would move, not anymore. So they do this on purpose. So they take advantage when companies are hot. Because and I'm going to repeat for the ones that are part of the Discord and listen to us. Um, the for our 401ks are based on the stock market, and that's retirement money that the country depends, that the retiree depends. You cannot jeopardize the future of the country by having on the long term the stock market to lose money, because then your elderly people will be suffering with no money. That's how it is in the United States. That's how it is designed to for you to profit from the stock, and that's the money that you're gonna have when you retire. You make companies to match your investment and all kinds of stuff. So what they do is once a company is not hot anymore, it just removes out
Right.
of the SP 500, right? And then they put another one that is hot. That happens on a daily basis. The percentage of influence that each company has on the market, it changes almost every week. And that is just to keep the stock market afloat and to keep it green, right?
Yeah,
So
if
a
you had
little
the original
trick that we
S&P
do.
500, if from when the fund started, it'd probably be pretty poor right now. You definitely wouldn't have those growth rates.
No, no, absolutely not. No, yeah, yeah. I don't think you never. Maybe IBM will
But
still
it's
be there.
amazing as one of the big catalysts for the push in the marketplace. SPX by and S&P 500. They all they're the same instrument essentially, but they're all just a
Yeah.
complete and utter wool over the head in terms of what they represent. They don't represent the economic growth. They represent the best
Mhm.
of this particular
Correct.
group, and they can continue to do that. And that is their function. It's not a hidden function, but people associate that with the market. But you look at the other side of the market. There's some deep, dark caverns and ugly corners and streets you
Mhm.
don't want to drive on, so to speak, in the market with the leftovers that the S&P 500 kicks out.
Yep. Yep. There is a lot of look back in the days. You guys remember Cisco? Everyone will
Sure.
talk about Cisco. If you're a trader, guy, everyone is looking at Cisco. Where's Cisco? I don't even look at Cisco now.
Yep.
I barely look at Oracle. And those two were like the drivers of the market. Everyone was looking and they got replaced. They got replaced by Amazon. They got replaced by Nvidia. They got replaced by Tesla. And this is stuff that we do constantly to replace the hot companies, the ones that are bringing the big bucks, the ones that are bringing the nice earnings, and keep the market afloat and keep the market pumping and give you an average of 10% return a year, because that's what you need, right? Then you have events that they can't control. Right? The economy needs to reset. Okay, we there then I don't want to go too deep into it, but people need to understand how the United States specifically work, and they work in their own bubble. Okay, we are the only country in the world that doesn't need to back up their own currency. Okay, think think of that for a second. Only country in the world that you don't need to back up the amount of money that you print. Okay, and this is because of the petrodollar. Since we got the petrodollar, it doesn't matter. We are secure as long as the world buys oil through dollars, and every country needs to convert their currency into dollars. We are okay, and this is why we get into wars and we get onto this. Once we start seeing that some countries are starting to buy with yen instead of dollars and starting those stocks. That's what we did to Venezuela and other stuff. So we gotta protect, and I'm totally in favor for that, right? We gotta protect the economy. We gotta protect our country and protect the dollar. And that's the system that we have. So when we have that, we can print money as we desire. Like
Hmm.
this bump here, this bump that we just had a week, what was this? A couple like 2 weeks ago. This is because we inject $180 billion into the market. The Fed inject this money. Okay, this was the pump was nothing else, and the market loved that we inject more money into the markets, okay, into the economy. Okay, but by doing that, we are highly increasing the likelihood of having a higher inflation. And with oil and everything that is happening, the oil prices, I think it's just a matter of time that everything will hit together, um, and we see a correction here. Um, we are we are really by a threat here of exposing all the flaws that we currently have.
It's
Um,
interesting though, because I can doom and gloom this with you too. We can do this all day long, but the one prevailing thing is that the manipulation is so strong that in those free falls things change and they move the target so that they're able to capture it. So while we will have those pullbacks and we will feel those pain points, they'll never ever be as justified, excuse me, as deep as they are justified to be. They'll always be salvaged
mhm.
somewhere at the midpoint to do it. Which is why if you expect the market's going to go to 600 and it stops at 700. Obviously the levels show all of that, but the key component to that too is that the market is always being manipulated, and it's not by us, you know. So
Uh, every single time that you have a pullback, right? What happened? We
gets bought
go
up,
up higher.
gets
Look,
bought up.
that's just what, and that's why I brought the monthly here to see. Okay, I'm not saying that we're done. This is the end of the world. No, what I'm saying is the markets need to reset. And look, I took everything away, and I literally just left the candles and the a naked chart. Okay, and if you look at market moves in waves, right? And if you look, where are support levels, right? This is a support level right here. Okay, this is another support level. You see, once we go up, 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 and then we retrace, we come to the support level, hold it and bounce. Another support level here. What do we do? Come down. Another support level there. What do we do? Look at that to the T. Okay. This is the first one that it failed. Look what
Mm-hmm.
happened. We bounced not from there, we bounced from here,
Mm-hmm.
meaning the market probably wants to go there because we haven't. Here is safe. You reached, you bounce, move forward. Let's go. We haven't touched that area. And here's another one. Okay. Okay. Here's the 700 that I've been talking. There it is. Okay. I love the monthly, and you can do the yearly and all that, but the monthly is enough for you to see if we have a pullback where you should expect the bounce, right? If you have, like, let's say where we are right now, a pullback, and from where we are, we just saw it's like 18% to the 700s, but it comes here, then this is a great opportunity to get in, right? And you can bounce even here, 715, 716. So, but this is always the same. This is what the market has been doing. The markets have been doing. Look, SPY here since 1993. We come down, we bounce, bounce. We just keep going. Look at this. This is insane right now. And this is not the economy that is going like this. This is that we take the best of the best of the companies in the economy, and we keep using, and the bad ones we replace them. And then this year are events that you cannot control, right? You cannot control COVID, you cannot control the the housing crash. You can control that, so the market is going to come down. But once it does, what happens? All your hedge fund companies, all everything for the 401k for the workers, we gotta buy. Let's get in, and then we make always a higher high from what you had after the pull. And I'm expecting that to happen again. And you can do something very interesting: is to count the candles from the pull back to the top and see how many they are. And if how far are we from that? Okay. Since this one and this one were very, very symmetrical. This one was a little shorter here, and then we had the pullback. Let's see what happens here now. Um, yeah, these two were almost identical. Um, yeah, this the market. There's a support. It's the wave. Look, there's one here. There's another one here. So we're gonna go there. Okay, history tells you that at one point you go there. We just thing is we don't know when, right? That's the only time, and that's why in the market time is expensive. Time is, if you want to get options or anything, time is expensive. And if you get in stocks, you got to be patient. But stocks you cannot get the move down. You can have stocks and then you hedge against your stocks with puts to protect your capital if you want.
Short the market. Just short
Or
it.
you do what a lot of people are doing right now, that is moving their money to gold, right?
hmm Yep.
Um, the gold is a big asset right now. It's a good edge against what might happen here. Okay, so this is the overall market that I want to go now. Um, I want to talk about some other things that I think will be very interesting. Tesla is one of them, right? Uh, Everyone that is on Tesla is a proud owner of Tesla shares. This is the chart since Tesla started, right? We have here what 2010. Tesla right now is not a car company. Okay, remember that Tesla is not a car company anymore. Tesla don't give two craps about cars. Tesla cares about cares about Optimus, that is their humanoid, and cares about how much money they make selling energy for people to charge their Teslas. I just went on a trip and I went drove from Dallas to Houston, and we have a Tesla. We took the Tesla, and I couldn't believe the amount of Teslas that are out there charging. Not just Teslas, but also other vehicles that 90% of them use Tesla chargers right now. Okay. He pretty much owns the monopoly of the EV charging stations. Just think about that for a second. Like you own the monopoly of the gas stations. That's pretty much what he does on the EV side. Every single time we see earnings, as a big part of Tesla is those earnings there. Um, with that being said, the next one is Optimus. Once he starts and he's thinking a million Optimus next year to be deployed into the market. And right now, the only reason that Tesla is not really going up here is because of the competition and the uncertainty. How much can Tesla control the market on the humanoid side? Okay. Once the market has a better understanding next year, as this can go up here. Okay. This can explode to 800. This can explode to 700, 750. Okay. I truly believe Tesla is something that you can have on the long run. And then when you combine that and the forces with SpaceX, if they can accomplish where they are trying to do, this company will be huge, huge. And we want to go out of space. We want to go to Mars. We're going to go to the moon again. We go to all that. And NASA is using SpaceX um, as they have never used it so much as they've been doing it right now, because before to send a rocket, it would cost you I don't know how many $billion. Now it's like just less in the millions because they use the resources and they reuse them again. So it's really amazing what he has accomplished in terms of SpaceX, in terms of the rocket ship program. So I think Tesla guys here, look, we are holding this line here on the monthly. We're in a channel. I took everything out if I put it the channel, but we're in this channel. Okay? If the news continue to come and they deploy the robo taxi and is successful, this is trading at a car company is no longer be trading as a car company and is going to be trading as a source of energy and a source of transportation and a source of labor. Okay. And he said it. He can put an Optimus in any part of the world for $30,000 and it will be the best surgeon in the world. Now imagine what it will do to countries in Africa, poor countries that don't have the technology, they don't have the means to have good doctors there. They don't have anything. And you can get a humanoid there for very cheap and do all that. the demand will be absolutely insane. The world. What we don't know now is the competition of that and how good they will be when they're deployed. Okay, so that's what I think we're holding to see here. Okay. It was the same thing as NVIDIA when it came out, right? It exploded right away. And now we're kind of coming because how is the competition coming? There's not really much competition for NVIDIA, but how much can you grow now, right?
Right.
Uh, that's the problem. You get to a point, there's so many companies out there, so many of us out there that you can
Ginja,
do more.
we've got about 5 minutes
Yeah, I
left
know.
on this one. Just giving you a heads up.
Yep. Yep. Um, this is just the first one. So we're going to have overall understanding of the market and what I think is really the stock of the future. I don't think it's Nvidia. And look, there's a lot of other stocks there with an enormous potential, but they're not solid companies as Tesla. I think from all the companies right now that we have here, Tesla is definitely the one that has the most potential because of how innovative and the products they can bring to the market to explode. And then my other one is that I don't think is going to go anywhere, and they just keep perfecting themselves and better. Also, is Amazon, right? Amazon is another beast. Amazon, guys, when this ever comes down, take advantage and get in because we. I don't think there's a company right now that can um,
He's trying. He's trying to
even.
do all the tech stuff too. So he's trying to
Yeah,
get in all those spaces, and
yeah.
um,
Right, man. How many
he
packages do
likes
you see
rocket
out
ships
there?
too. You know.
Yeah. Yeah, I know. He was doing that thing with Virgin again,
Yep.
Virgin Galactic, sending people up there. But yeah, Amazon, guys, it's another one that you can keep on your portfolio. And then whatever it comes down to these levels, to the 190s, there you can load there. This is another one that I love. This is the big one. Next week, so we have 4 minutes. Next week, we're gonna. This was our first one. What we're gonna do next week is we're gonna open the last 10, 15 minutes to stocks that you guys are interested in us to go over, technical analysis, and we'll go also into some other
Well, what's
companies
interesting
that are not as popular.
what's interesting for next week is we will have CPI behind us on that Wednesday, so we'll have had
Hmm.
that in the morning, and that'll be the first day of Jackson Hole Symposium, so we can
Mm.
talk a little bit about that
Yeah,
too. So that's a good lay-in for next week's chart talk.
yeah, fantastic. Well, thanks everyone. I don't know if you want to add anything else here, Banana, and
Uh,
probably next week I'll let you go
okay, you're gonna
and
fire
go
me?
over it.
Oh, you mean you let me talk? Sorry, I got it. I thought you.
But
Let me go.
I like the way, yeah, I really like the way we're doing. Like
Yeah.
you trying to pat check me, and I love that. But look at Spy here, guys. Look, see the 4 hour. I just wanted to pull this to the not trading, but look at that.
Yep.
Okay, look at that. We closed the gap.
Gap is closed
The gap is closed,
and
and we
rejected.
rejected right
Yep.
away.
And
Okay,
rejected. And now we're
so
at the
we,
recoil. So, yep.
now it's make or break. Or
Yep.
we hold this, or we're gonna make a lower low.
Yep.
Okay. So, well, in what's what in 2 hours we're gonna get the minutes. We'll see what happens from that too.
Yeah. 2 p.m. Yep.
Yeah. Okay.
Fun
Sounds
stuff.
good.
All
Yeah,
right.
I
Thanks,
know.
everybody.
Love it. Thank you. Have a
Thanks,
good day.
Ginja.
Bye.
Appreciate it. All right. Bye, everybody.
So sign up quick and make the next big trip.